thank you so much for joining me tonight. I know every day this week we've pretty much been live, but today's talk, we're going to talk about some construction loans. And before you enter a construction contract, what should you do? So sorry about some of the lighting. I'm in my backyard. This is my backyard. Welcome to the humble abode. And but we want to talk about, before you enter a construction contract, things that you need to do. So hopefully my audio's okay and my video's okay because I'm in my backyard. I'll pull the mic a little bit closer. But so here's what happens if you're getting involved in constructing a house. God bless you. You know, it's probably like, hey, I want to build my dream house, which most people are looking to do. And but there's some things I really want to explain to people where people are truly getting hosed when it comes to building a house. So I want to just give you the experience we had just recently on a couple different construction loans. So to help you guys avoid these obstacles, I guess I'll say it that way. So when you're going into I'm going to just talk just a little bit. Let's talk about the markets a little bit, just if you guys don't mind, for the next couple minutes while we let people join us. So if you're joining in, please just give me a quick little blip. Let me know where you're coming from. Where do you live? I'll just say it. Say, hey guys, we got somebody in Ohio or whatever, and I'll let you know on that. But today's topic is going to be construction loans. We're going to talk about that for about 15 or 20 minutes. Then I have Sir Ashley, a realtor in the Carolinas. He's in Charlotte. He's going to give us the East Coast view of real estate. We had the West Coast view with Jeb Smith the other day. And today we're going to talk about the East Coast. So thank you so much. We got Houston on. You know, most of my loans come from Houston, or actually Texas and California. The good news here is we're going to be federally exempt probably within the next 48 hours. So we'll be able to help anybody in the entire country. So that's that. Guys, I'm sorry about the lighting. This is my backyard. So I just thought I'd do it outside because it's 80 degrees here in Chicago and we only have about 8 days of this good weather. So I figured I would do it. So the markets right now, we got Maryland, we got people all over the place. So the good news to you guys is if you're watching, as of next Tuesday, we'll be able to do loans basically anywhere in the country for you. So we're going to be federally exempt. What does that mean? Well, basically, you're going to see some of our logo stuff changing. We're actually going to join a bank. A bank let me join their platform and go under their federal exemption so we can help clients all over the country, because we have people in New York and New Jersey and Utah and other places, Oregon, that it's just really tough to get licensed and stay up to date on licensing. So I negotiated with a bank, and they're bringing us on as a broker under their umbrella. So I'll still be able to broker to over 100 different lenders throughout the country. But the good news is we'll be federally exempt, so I'll be able to help everybody. So the markets are crazy. I know that, but we're going to kind of get away from on a rate sensitive channel, because a lot of people just check out for rates. What I want to do is I want to educate everybody, and the whole goal of the channel was just education. New York, New Jersey, we'll be able to help you guys as of Tuesday. We're going to be federally exempt, so thank you for joining us. But we're going to try to get away from the just rate, because I'm more than just rate. My goal here is to educate and inform you guys everything real estate. And that's what I do by having realtors on and everything else. But we emphasize in financing, and the financing part is more complex than you think. I don't know if you saw my video or live earlier today. I had a young couple reach out to me, and they're closing, I think, tomorrow, and they just found me. And they sent over their closing disclosure. The closing disclosure is basically, you're done. Okay, you're done. And they said, hey, can you look at this? Let me know if we're getting a fair deal. Well, they were getting a rate of 5.5%, and their cost for the lender and the originator was $10,850. So just shy of $11,000. I got their loan. I priced out, and when I call pricing, I check rates all over the country to see what we can get them. We're at the same rate, 5.5, and their fee is 0. So we would have been able to save them just shy of $11,000. So that's where we want, please reach out to us. What we do, our main goal is to make sure we inform you guys. So hopefully you're watching the videos and you're like, hey, I get this. And you reach out to us. So make sure, go over everything. Most people still think you have to put 20% down or 10% down. I just saw a thing coming through my YouTube blip saying, most first-time homebuyers they can get away with 10% down. No, they can get away with 3% down. So our goal here is to educate people on all this stuff. And I need your help. Okay, that's where I ask you to please share and give me a thumbs up. It's basically just so more and more people find us. Okay, so let's get on to it. We got a lot of people that joined us so far. So today's topic is construction. If you're building a house, first thing I'm going to ask you to do, I'm going to plead, get an attorney. Okay, let me give you the horror story from today, why I didn't do a video yesterday. So we start working with a client back in, I think it was January-ish, and we get them in, we lock them in, everything's going good. But we were competing against their, I think Nico's joining us. We were competing against their lender, okay? Their builder's lender. All right. So that's what we're competing. So we already kind of pissed off the builder because of that, because they own 49% of the brokerage company. Okay. So that's what we're seeing there. So we already ticked them off at the beginning. Now, here's what happens is we're working on this loan diligently. And we started, we're down to, all we needed was conditions from the builder. Okay, we needed documents from the builder, making sure the water certs were done and all just the miscellaneous checklists. All right, we start asking for that. The last time we started on April 20th, and we've been calling repetitiously probably every other day to follow up with that. All right, so this Tuesday, the builder sends us the documents we need. And then they say, well, per the contract, you have 3 days to close this. So it's got to close on Friday, or we're going to pull the contract, meaning they're not going to sell it to that borrower. Guys, we can't turn a deal that way. Even federal laws, I can't turn a deal that fast because we didn't even have the appraisal back. Why? Well, we ordered the appraisal back a long time ago, but the builder put it off and put it off and put it off until just last week. We got the appraisal today. And then they're like, well, our lender could do it. Your lender would not be able to do it because they would be out of federal law. You can't do it. So it might be a little confusing. That's what's going on. Finally we get the appraisal in this afternoon. Well, why didn't the builder want to sell it to our client? Well, because I think like 60,000 more than what our borrower was buying it. We get them in, we lock them in, everything's going. So that's just reasonings why, so I'm going back and forth with the builder, and I go all the way to the vice president, and he's like, well, I'm sorry to have to disagree with what your analogies here are, or your insinuations, but we'll give them to the 31st. Okay. So that's where Nico's been this whole time, working on that. That's where I've been last night, working on this thing since about noon yesterday. We got it finally cleared just now. That's why Nico popped on, and it'll close on the 31st to make sure our client's happy. If you guys know how and where I can report this builder, because it's a pretty shitty situation when they come in and they know what they're doing and they're deliberately doing this. And I'm not the world's not ending. I'm not that kind of person, but this takes the cake. So it drives me nuts because, Nico was on the phone with the couple last night, and basically everybody's in tears because they're like, we're not going to get our dream home. So we worked around the clock to get it done. So if you even tried to call me today, I apologize. We've been preoccupied because we're getting that person in that house. Okay, so that's how we work. So I'm not just I'm not just an interest rate guy. We're the whole package. We can get you the best, pretty much the best rate in the country at the lowest cost. We got every program out there for you, and we know what we're doing, and we have the connections. So that's it about construction. If you guys have any horror stories on construction, or you're thinking about construction, please let us know. And, or ask any questions that you have in this, but I would highly suggest that you review your contract. In this person's contract, I still have not been able to find where it says that if we do not close within that 3 days that they give us, that they could legally pull this and sell it to somebody else. It does state that there would be fees, which yes, there'd be fees, but it didn't say they would pull the rug on the borrower and basically just crush their dreams because they wouldn't give us one extra day to close. Okay, so that's my rant for today. So I just wanted to be cautious. I apologize. We might have switched the topic at last minute to a point, but this is a big issue, a big issue. And if you guys are out there looking to build, I would highly suggest first thing, get an attorney, have them review it. And if the builder doesn't like what your attorney modifies, then walk away because they can basically screw you right at the end. Okay, so sorry about my rant, but that's that. So let's go through here. Education for all of us. Let me go through. Man, there is a lot of you guys on here. So if you would, please give us a thumbs up. Help us help the algorithms. If you would, we have Sir Ashley. He's joining us at about 7:30. I logged in earlier because I was having some issues yesterday or the day before on a live when I did interview with Jeb Smith. I had issues. I went to log in and nothing worked. So I logged in about 45 minutes early. Nico, I didn't tell you this. I logged in and I'm looking down. I thought it was you who joined me. And I looked down and Sir Ashley's on at like 6:45. And I'm like, dude, you're in the wrong time zone. So that's kind of what's going on. So, hey, your audio's freaking awesome today. Nico finally upgraded and got a new mic, and Nico just started his Millennial Mortgage YouTube channel, which I'll be involved with him on that. So we're going to collaborate on that. And the reason being is we check out all our algorithms, and here's most of the people that watch us. So I see a lot of ladies on here. Thank you. But most of our views it's about 78% males and about 80% from 33 to 45. I like it, but I hope we get more and more women on here to participate, ask questions. That's what this is about, to make sure you're educated. So that's it. So you all done? Everything's signed, sealed, delivered? You good?
Good. CD is signed. We're going to close on the 31st.
Awesome. Cool. Okay, so we got so far North Carolina. Nico, I can't see very well, so I might need your help.
Yeah, we got a bunch of people: North Carolina, Houston, Chicago, Texas, Maryland, New Jersey. And I got a first question for you if you're ready.
Yep, I'm ready. So, guys, thanks for joining. I know it's a long holiday weekend. I actually anticipated about 10 people here today, and we've already far exceeded that. So, thank you so much. But go ahead. I'm sorry. I can't read it. I apologize. I forgot my glasses.
All good. I got you. So Slot Kid, he has a $1 million in equity on a rental property. Is that silly or just keep it paid off? I have a $1 million in equity on rental property. Is that silly?
Question. Well, it depends. What would you pull money out for? I guess it would be my question. If you're, and I say this all the time, and I've said it on several videos, if you're pulling out money just to put in the savings account at 0.00001, I wouldn't. If you want to pull it out because you think the market's going to crash, I wouldn't. If you want to pull out that equity and buy another property, because obviously you know what you're doing. If you have a $1 million rental property free and clear, if you want to parlay some of your winnings, I'll say that way, into other real estate, that would be the what I would do. Or if you have a lot of debt, student loan debt, car debt, credit card debt, so forth, consolidate that under a mortgage, which probably has a rate, a fraction of what those loans would be. But I wouldn't just refinance just to, pull it like in thinking the market's going to crash. I wouldn't just pull out all my equity because I think the market's going to crash, because you're not going to lose your house, and the house is free and clear. So you got huge cash flow. I would just sit on the sidelines in this, unless there's a purpose for that cash.
Awesome. All right, Dan, great job educating us. All right. That comes from Ads Murty. Awesome, man. We appreciate you, brother. Some Miami, some Colorado love, another Miami. Oh, maybe you'll get a kick out of this, Dan. Watching from Miami, most expensive place to live.
How about Dubai? Never been there. I would love to go there. I saw just something the other day. There was something going on there, and it looks pretty cool. It looks like a tropical place and everything else. I have no desire to really go overseas right now. But you're probably right. That New York, but you're probably worse than New York. But yeah, I get it. So if you're looking to buy, so that's what I would say. So great. I appreciate the comment. Thanks.
Awesome. This is Ohm, Dan. He's a longtime follower. I've talked to him a bunch. I am currently working with him. So
cool.
Question.
Yep.
Can you lock a rate for 60 days and 90 days at the same time?
Yeah. Do the 90-day lock and it automatically locks you in at 60. You can't, you can't, it's like buying a stock. I don't even know an analogy. Once you lock, we got to choose. So the 60-day lock or a 90-day lock. If you lock the 90-day, there's not that much of a variance in the cost for the 90-day versus the 60-day. And especially if you're building or you think that there might be some delays in some things, I would take the 90-day all day long. And once you get to, you can go up to 180. Then once you get over 180-day lock, the costs just go out the roof. It's just that's where I would not suggest you go. But I would err on the side of caution and go with the 90-day. And hopefully that's what Nico did. If not, email me and I'll punch him.
Yeah,
no, it was a joke, guys. Joke.
No, he does beat me. No, but here's the thing, though, right, Dan? And just like you tell me, so we're gonna lock you in for the 90 days, right? Just in case, because this is a lock and shop scenario, right, Dan? So. Yep.
Oh, I got it. Yes.
Right. So let's just say we got him locked in for 90 days. But hold on real quick. Let's say next month he comes to me with a purchase contract and I look at rates for 30-day locks and those are better. I'm going to get him locked in at that. So
we'll switch lenders for you.
Exactly. So in certain cases, you might as well go with that 90-day lender. So you got the extra couple days or a full month.
Absolutely.
And then again, we're going to relook at that rate, especially when you bring this contract to us. So.
And in this business, you never know what could happen. For example, let's say you're in the process of building this house and just something happens to the house and it takes them, a week or two to fix it, or you get an inspection done or the appraisal done. And there's just some things that need fixed that might take, a couple weeks to do it. You blew the 60-day lock and it gets expensive to extend every day because there's a cost per day basically. So I wouldn't even think twice about it. 90 days and go with it. Lock and run.
Awesome. Got some California people.
Hope you guys saw me on Jeb's his video the other day. If not, check him out. He's right in your neck of the woods and he's an awesome guy. I learn a lot from his channel and he's a truly and really nice guy.
Yeah, he is awesome. So Missouri coming in, checking in hot with us, Dan.
Awesome.
All right. So Annette just saying she doesn't fit the algorithm. She's a female.
Sorry, Annette. Thanks. I like to go against the grain. If you watch my channel and you enjoy it, you see there's a lot of times I go against the grain. One of the things is I hate all the false stuff that people post out there, and they're getting bazillions of clicks. God bless them. But it's only going to be a short time where they lose credibility because they're just, they just jump on that bandwagon for a while. That's one of the reasons why I reached out to Jeb and Sir Ashley. We're going to have him on shortly. And I like people that are real, that just give you, here's what it is. I know we do mortgages for a living. I know most of these people sell homes for a living, but I don't have a lot of people that I collaborate with. But when I do, I try to, pinpoint them and what are your thoughts behind all this? And I want them to give you the true information out there. I don't want it sugar-coated. I don't want it false. And that's when you call us, I'll tell you, here's what I would do. And that's like the other person. They got $1 million home. They can refinance this. If I tell him not to refinance and he doesn't, I don't make any money. But why should he refinance? So it's not only just a mortgage, I'll say a mortgage channel. It's also financing. But we're not going to talk about stocks and bonds. It's going to be real estate. Okay. So we're just trying to guide you in the right direction. You might disagree with what we say sometimes, but that's the whole beauty of this. We can have differences of opinions, but I'm not going to get mad. Don't get mad at me.
Awesome.
Cool.
Oh, your guy, Dan Samit.
Hey, buddy. How you doing? You got to call me. Email me. I want to talk to you personally. I truly do. You're on here all the time. You subscribe to my channels and everything else. So I would really like to talk to you. I know you're in the mortgage business. Might have some good news for you. We're like I said at the beginning of the channel, I did tell them what we're doing. We will be federally exempt as of basically, Nico will probably be there on Tuesday. I'm moving the team over gradually to the federal exemption. So we'll be able to help anybody in the entire country here. And that's, I apologize. We've been putting some people off, but it just got, everything got approved today. So as of next week, we'll be everywhere in the country and be able to help you guys no matter what. So the licensing issue will be a thing in the past. So I apologize for that, but thanks for sticking with us.
All right, cool. I'm going to just go with joke here. That's what I'm going to call him. What is the standard time frame to lock in a rate, Dan? 30, 60 days?
You know what? Normally, the tough thing is it's a different market right now. Right now, it's all purchases. I don't know if we, out of millions of dollars we have in the pipeline, I don't even know if we have a refinance. So normally, when somebody calls in for a refinance, those are in and out like that. So 30-day lock. You can't do a 15-day because that has to be already basically clear to close to be able to lock in at a 15-day lock. But 30 days on refinances. Now, the purchase piece is basically we're going to work off of your contract. The more due diligence we do up front at the beginning, the easier it is on the back end. Meaning this, you apply for a loan. I hope I'm not really disappearing here on you guys. You apply for a loan. We're going to get the loan underwritten, and our goal is to get you everything approved, meaning we're going to get your pay stubs cleared, your bank statements cleared, everything cleared, but we still have to wait on an appraisal. So we're going to look at your where you are in our system, with your contract. I don't know what the heck that was, what your contract reads, and we're going to do everything we can to meet that. But sometimes there are delays in the appraisal, so the appraisal process. But we're going to try our darndest to meet your closing date that you put on the purchase agreement when you sign that with the seller.
Cool. It's a little more add-on. Same guy, Joe. Where do you think interest rates will be in Q1 20?
Honestly, the more and more news that's coming out right now, I think we're going to be stagnant right now, right here. It could teeter higher because the market is always overshoot, but you're going to see GDP. The definition of GDP is 2 consecutive quarters in the U.S. of negative GDP, or let me rephrase that. A recession is 2 quarters of negative GDP. Q1, the final number just came out. The estimate was minus 1.3. It actually validated at 1.5. So Q1 of 2022, we had a negative 1.5 GDP. So far, this is Q2, we're negative. So if we technically get a negative quarter, the quarter ends June, we will be in the recession. Okay, so that being said, let's look at everything else. Let's look at consumer durable goods orders. We look at production. We look at the employment numbers. We look at inflation. We look at everything else. And it's basically saying, wait a second, I think the market's doing the Federal Reserve's job. Yes, the inflation skyrocketed. It skyrocketed. I agree. I was on the fence with the Federal Reserve saying it's going to deplete. And here's my analysis behind that. The biggest thing I like to give you guys is the why. Okay, so I'm going to say it real quick just to explain what happened and why there was way too much overspending. And then the supply chain issue really screwed things up. So let's just rewind a little bit. Let's go back to 2020, when basically March of 2020, everything just shut down. Okay, so then all of a sudden the government came out and said, okay, we're going to enforce the forbearance rules on your mortgage, which states that your lender can allow you to forbear, not skip, not miss, not whatever, just forbear. So put it off. Mortgage payments up to 18 months. Okay, 7.2 million people applied for that, and they were in there. Okay, so you got that. Then you had student loan deferrals. My kids have it as well. So I'm in the same boat as you guys. Okay, so but if you look at it, you don't have a mortgage payment, you don't have a student loan payment, and a lot of people, and this was proven, 70% of the stimulus money went into people's savings. So you had a run in the stock market. Why else would the stock market be at an all-time high if the world is shut down? Why? Okay, so there's excess money. You have the cryptocurrencies just flying because there's a lot of speculative money. Okay, so and when I did my research, 2021, the consumer had the most disposable income in 2021 ever in history. How can that be? If the world was shut down? It's because there was an ample stimulus. I'm not blaming anybody. I'm just telling you the facts. There was ample stimulus, and a lot of the major bills that most families had were deferred. So you had a lot of money going out there. So what happens is we're not a nation of savers. We saved enough, but we spend. It's easy, just especially with Amazon. You go there, click, 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 and you bought something. Okay, I did it too. So we had extra money because we were missing some payments we were normally making, and we spent it. And then on top of it, we have a supply chain issue that's the goods aren't getting here. So what happens is you have over demand, limited supply. What happens when that's out of whack? Prices go up till there's an equilibrium. Okay. That's what we're seeing. I knew the inflation was coming, but I still think it's going to turn pretty fast. People are starting to freak out. I just went to the gas pump and it cost me $100 to fill up my little car. Okay, so that's taking a toll. You can see a lot of companies aren't hitting their earnings. That's taking a toll. You see the dollar store. I was just reading this before I went on. Dollar store. I don't know if everybody has those throughout the country. They're killing it, because everybody's starting to put off the major purchases and just buying what they need. Okay, so that's my long answer to that question. But I see rates being stagnant right now. We might shoot to a 6, but I think it's going to start coming down from now. And who do we have? Hold on, Nico. We have.
I was waiting. I saw it come in.
The legend. Here, how do we do that? Dude, how do I make you big? Okay, so I want to introduce him. Sir Ashley, he's a friend of mine. He's a realtor down in Charlotte. He is a fantastic guy. Great channel, great information. He doesn't pump FOMO. He's a realist, and that's why I reached out to him. I love his content. Actually, we've referred some clients back and forth together, and he's just real. So welcome, buddy.
Thank you.
I told them when I logged on at 6:30, it's like, who is that? You actually scared me. I'm like, wait a second, am I on another channel?
Yeah, somebody was just waiting for you on your channel in the background.
I'm like, dude, wrong time zone. So I'm in Chicago. Yeah. He's in Charlotte. So tell them a little bit about yourself, your channel, and what you do.
Yes. So I have a YouTube channel, Real Estate Advisor Sir Ashley. And on the channel, we talk about the Carolinas, money, real estate, and personal finance. So that's what I love talking about. What do? I do a little bit of everything. I'm an investor. I'm a real estate agent. I have a real estate team here in the Carolinas, North and South Carolina. And I'm a reformed attorney. I used to practice criminal law full time. It was a stress. Oh man.
And you got into real estate. What are you thinking?
Yeah. Well, the thing is, I got into real estate. I started investing in real estate while I was an attorney.
Yeah.
And I loved real estate. And then my mentor told me, you're being selfish. You need to share some of this knowledge with other people. And I got my license, and here I am.
God bless you, brother. Awesome. And that's why I started following Sir Ashley a decent time ago. And honestly, I reached out to him, and I'm like, there's no way he's going to, email me back, and I'll be doggone it. I don't even know if it was 24 hours. He actually called me, and then I forgot to call him back because I lost this thing. And then I'm like, where is he? And then we connected. Mm-hmm. He had me on his show a couple weeks ago. We were talking about credit, how important credit is. And from there, we just formed a nice relationship. And I call him for some stuff, and we referred some clients to him. He's referred clients to us. I like knowing who I'm working with. And again, Sir Ashley, the reason why I reached out to him was he doesn't pump that false information that so many people are pumping out there to just get the clicks. We truly have a passion to help. So I had a young lady that was moving from New York. Her dream was to move to the Carolinas, but she didn't think she could fit or find a house for the price range. So I get all the stuff. I get it pre-approved. I get my man on the phone. Hey, what do you got? He's like, dude, yeah, we can do that. We can get that done. Got them together, and hopefully it goes from there. So that's what I look for. So how's things look? What we were just talking about is rates and where Q4 should be and so forth. Are you starting to see a slowdown where, down in your market, is the houses on the market longer? They're more supply. What are you seeing?
I'm definitely so dated. Can you hear me?
No, we're losing you. Nico, can you?
No.
Yeah, you're like,
what about now?
You're buffered real bad.
Oh man. Let me come back. I'll come right back.
Okay. Let him reset. But again, this is why I have people all over the country, is because here's my man. What's up, brother? I wish I had you on here. So we were just talking about you. We were giving you kudos. We got some other people here from Southern California. So Jeb's if you guys haven't heard of Jeb Smith, please check out his channel. Again, he's one of those other ones that I reached out to. I actually gave him a personal apology the other day. He was the first person, Jeb. I don't know if I even told you. You're the first person I ever reached out to on YouTube because I loved your channel. And he calls me back, and I blow off his phone call. So I didn't purposely blow it off. I just missed it. And then it was like this and that and this and that. And I completely lost it. And then I tried to get back with him, and he's extremely busy. And I'm like, I probably ticked him off. And then we just reconnected not too long ago. And Jeb, I also signed up for the coaching on YouTube, buddy. So thanks for the input there. I greatly appreciate it. But if you guys haven't checked out Jeb, please check out his channel. I'll put a link down there below in the description for him and Sir Ashley as well. We're just waiting for Sir Ashley to come in. And you know what? What did I keep calling Jeb Smith? Was I calling him Jeb?
Yeah.
Okay. Somebody just said Jeb. Maybe I think Jeb, they're just giving you a shout out. Okay. So that was this eccentric. So thanks for joining us, Jeb. I hope you have a fantastic weekend, buddy. And I just learned Jeb got himself an electric car, and he's loving it. And he got it for fun. That was kind of cool. So thanks, Jeb. I don't know. I think we lost Sir Ashley. He has a bad connection. But the reason why I reached out to Sir Ashley was just to find out. Last week we met with, or this week we met with Jeb Smith. We were on the phone. Fantastic day, giving us huge insight to Southern California. The tough thing about Southern California is even Jeb will say it's kind of, I won't say an island, but it's different. Okay, that's the best thing I can say. It's different. I think we got Sir Ashley back. Let's see if we got him. You there? Got it? You in?
I'm here. Can you see me? Can you hear me?
Yes, sir. Yes, sir.
Yeah.
Go ahead.
Perfect.
Okay, so where we were, I'll stop what I'm saying. Yeah. Let us know what's the market looking like down there, and how hot is it?
Yeah. So it really depends on the price point.
Okay.
We have starting to see a slowdown. Now, the reports are usually backdated, usually a month behind. Right. But in the trenches, day to day, we start to see days building up on market and properties selling, but not getting those multiple offers selling for way above ask like they were just in January and February.
I'm cool with that.
Yeah.
That was just driving the insanity. I guess I'm not one of those proponents of, you'll have people come in here. I hope there's a huge housing crash so I can buy. It's pretty selfish. You know what I mean? Like, wish the stock market would just crash to zero. Then I can start buying. You're going to bankrupt millions and billions of people.
But one thing they don't understand when they say that is they're not looking at the sheer numbers. They talk about they want the market to crash. Okay, they want it to crash 20%. That's just last year's price. You're paying.
We're losing you again.
Man, I'm not sure what's going on.
Yeah. I don't know. Yeah, I thought when you and I started talking earlier, I thought it was my connection, and I rebooted my server and actually came and brought a booster right next to me. But I think it's got to be on your side because Nico's coming through fine too.
That is totally going on.
Yeah, you're like pinging and dinging when you talk. You there?
I think we lost him.
Yeah, I'm gonna have to drop you, bud. I apologize. I'll get you on here next week or so. I don't know what's going on, and I don't want you to continue to get frustrated. You want to try it again? All right, we're gonna remove him from now. So go back. Let's go back to. But Jeb, thanks for joining us tonight, buddy. I appreciate it.
You want to roll in some questions, Dan?
Please, yeah. Let's get to it.
All right, cool. Under contract on my new construction, lender won't let me lock in because August closing date is not solidified. If I use another lender, pause.
No. I was saying call us. Keep going.
I'm sorry. If I use another lender, they'll have to pull my credit twice before closing. What should I do? August.
Call us. Here's what I'd like to see. I don't know the name of it. Please email me, and we'll put my email down below. Email me your loan estimate. The reason being is, it's irrelevant at that point. Are you getting any credits back from the builder? If so, how much? But what's most likely going to happen, it doesn't matter. I'm just telling you guys, I'll get some clients on here that are in the process of building, or we closed in buildings, and they'll let you know how frustrated they were and are, and they're glad that they moved with us, because they wouldn't have purchased these houses if it wasn't for our due diligence and us really pounding on these builders. But what I would do is send us your contract. That's the first thing I'd like to see from you. Let me review your contract, see what it says. What would you be missing out on if you didn't use their lender? And then from there, what I would do is I would apply with us. We'll get you approved. We will monitor the market and on basically a tick by tick basis to make sure we lock you at the right time. But like Nico was saying, we have 100 different lenders to work with. So I don't like doing this, and it doesn't happen a lot. But let's say we lock you in today, and 30 days before your closing rates, we lock you in at 5.5. 30 days before closing, rates are 4.99. I'm going to try to renegotiate with that current lender and just say, guys, I'm a broker. My job is to get my client the best package out there. So I might have to pick up this package and move it to another lender who does have that 4.99 rate. Would you honor it for us? We give you hundreds of millions of dollars a year. And if not, hey, I tried, but I wanted to give you the business, but we're going to move on. So we lock you in. That's your insurance. That's your insurance card. Okay. Then what we do is we monitor the market. But right now, I'm not locking in anybody because rates continue to get better and better and better on a daily basis. So, why lock you in when we can, if you want to buy a stock and every day it's just plummeting and plummeting, are you going to wait for a reversal? Well, that's the same thing we do with mortgage rates. They're getting better by the day, not huge, good enough. So if you pick up 0.1 a day or 0.05 a day, but you wait 10 days, 0.5%. And I'm not exaggerating. Just I think it was yesterday, the day before, the FHA program rates went up. I think it was 1/8 or 1/4 one day. So I would apply now. Well, yes, we have to pull your credit. It's the credit pools aren't as everybody. I don't see it as much anymore, but it used to be where people were just crazy about credit pools. Let me just give you an idea about credit pools. Your credit truly can change. The score can change every day. You might not be aware of that. I'm actually going to have somebody from NCC. They're a credit counseling service. I'm going to have them on, I think, the 2nd or 3rd week of June. You're going to find out a ton of information about credit that I can guarantee you didn't know. So I'll be posting that event here shortly. I just got the commitment today from that person. It's nuts once you guys really learn the credit system. So I'd be the first one to say, hey, don't apply anywhere else. Just make sure you stay with that lender and only have them pull your credit one more time. No. I would say let us apply with us. What we also have on our credit system, when we pull your credit, it gives us your credit scores. So it'll say Mr. Smith's credit score is 710. But under that 710, it's going to give us a number. That number might be 150, 60, 70. What that number means, if we do something, it does give us what the something was, but if we do something, we can pick up that many points. So let's say you're at a 710. Well, the sweet spot in mortgages is 740. Okay. But if that thing gives us a plus 40, we know we might be able to get you 40 more points. So what we do is we run the analysis. I think it costs like $8 or $10 or something like that. And it'll spell out, if they do this, you'll pick up those 40 points. We'll email you that immediately. You do it. If you do that pretty quick, say within a couple, 3, 4, 5 days, I can guarantee you we'll pick up those points. But why I say your credit changes every day, your credit scores can change every day, is how the credit score system works is, let's say you have a Target, a Walmart, I know it's not true, but a McDonald's and a Burger King credit card. Okay. Well, the day that Walmart pushes your data to the credit agencies, your credit score will change. So let's say Walmart posts on the 3rd, and then McDonald's posts on the 7th, and then Burger King posts on the 8th, and then the other one posts on the 10th. Every time that would go, your credit score changes. So don't be completely wowed over, my credit score is going to do this. Believe me, we want you to be in the primo package. We're going to help you get there. That's part of our job. We're not the place to just go and click, 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 and you're done and everything's automated. You don't talk to anybody or whatever. We get involved. So if you just want the fast, no talk, whatever, this, that, yeah, we can be your place. We'd love to help you. But where we like to do is we like to educate and inform you guys. We love working with first-time home buyers. We're trying to educate you guys right now to say, if you're building a home, God bless you. But please be careful, because this is what we're facing. These are true stories that we're going to have. Nico, was your client, he's cool with coming on? Did you ask him yet?
Yeah. Well, once we're done with closing, he's going to
promise
come on.
The guy, the family we're helping today, or we helped today and yesterday, we'll have them on here and we'll let you hear their horror stories. And sure. I'm not coaching them or anything. They're basically going to tell you what happened in the whys, and you can find out for yourself.
100%. And then one thing, Wakefall,
answers. Sorry.
One thing I would say, Wakefall, is you're right in August, so you might only have to pull it once. Some lenders' credit reports are good for 90 days, others are good for 60 days, ours are good for 90. So you might be in the clear there, bud.
Yeah.
All right, next question. Emraz, do you have any advice for someone that's trying to sell and buy in a different state? Should I sell my home now or wait?
No, you can actually do it at the same time. We can do multiple closings. You could sell your house. What's going to happen? I don't know the whole details of it, but what can happen is you sell that morning, say, you wire the funds from that closing to the other closing, and the money's there. Okay, so that happens quite a bit. It doesn't matter what state you're in, because you can pre-sign in most states the sale part of your process, and then you have to be present normally at the purchase part, unless you have a power of attorney, but you can pre-sign all of your disclosures for the sale and only really have to go to the purchase piece of the equation. So if you're in different states, that's okay. With today's technology, it happens all the time.
All right, cool, Dan. Give me
one. I'm not in a t-shirt. It's actually a shirt.
Oh, no problem. All right. My mortgage lender offered me a USDA loan. The down payment and closing costs will be financed. She said if I live there for more than 3 years, I would not have to pay for the down payment and closing costs.
Huh? You wouldn't have to pay. Wouldn't have to pay the down. There's no down payment on USDA. So USDA, the reason I would assume you're going USDA, I think, Jose, is 0% down. And the only thing about the 3-year thing is if you're getting a grant or some grant money, that's a prerequisite of the grant, that after 3 years it gets forgiven. But if you're going USDA at 100%, all you really would need is your closing costs, which might be $2-3 grand. I wouldn't get grant money for that. I would try my darndest to figure out how to save it or borrow or steal or whatever to get that money. And I'm joking on the stealing and whatever else, but to be able to have that at closing. But if you wouldn't mind calling, we're working tomorrow, so we're in. If you guys want to call, let me see if I can find that banner. If you guys want to call in tomorrow, and we'd love to help, but I would need more on that one. But USDA is 100% financing, and unless there's some reason you have a prepay of a 3-year, I don't understand what the 3-year wouldn't have to pay the down payment back. Sorry.
No, all good. So it's just kind of a follow up. Is this a good deal, or is a conventional loan better? My credit score is 730. So
with the USDA, it's 0% financing, and the PMI factor is virtually nil. So it depends on how much money you're going to put down. Now, if you're putting 20% down, I'd go with the lowest rate. If you're putting less than 20% down, I would compare the rate and the PMI factors involved in that to see which one would mathematically come out better. Is what I would do. So your credit score, the reason why my assumption would be that you're doing the USDA is 0% down, and conventional loans don't have that feature. You'd have to have at least 3% down.
Awesome. Cool. So your guy Samit, absolutely. The lender I do majority of my reverse mortgage loans with has pulled from jumbo loans.
They're probably not doing it anymore. There's a lot of people getting non-QMs. Yeah, non-QM companies were falling by the wayside about 2-3 months ago, and then a report today says they should be growing at a 30. I think it was a 30%, 22%. They expect a 22% increase in their volume this year. When the mortgage industry in general is down. Oh, heck, we're probably down 50% from where there are no refinances. I mean, there's none. So that's, I'm sorry, I'm trying to get some lighting correctly. So there's no refinances. So our volume is basically half of what we were where we were last year. I'm still happy with it. I just, I'm like you guys. I wish there was just calm in the market. These rates just flying up and down on a daily basis. I love just, I was on Jeb's show the other day and he's like, I don't know if you're going to agree with me, but I love when rates are stagnant. I do too, because, I can live on this. I can't live with this, nor can you guys. So, yeah. But thanks. But Samir, where is he? Please call me tomorrow or and ask for me or email me, please. I want to talk to you personally.
Chill. All right, cool. Lillian, using lender from construction builder. If we use an outside lender, will that affect our contract from not getting the new home sold? Assuming
no.
And I'll say no, and Dan, I'll jump in real quick. Just I'm dealing with new
sure.
construction.
You just faced this for 48 hours.
Yeah, and most likely though, too, all that's going to happen is your builder, like the rep or the seller that you're working with, most likely they're going to have you sign a document just stating that you're working with an outside lender. It's not going to affect anything. Here's the only thing I can tell you: make sure you're using an attorney, right? And also, make sure you're still getting updates from that rep, right? Because I don't know if you were here earlier, like Dan was telling, we were reaching out to this builder for literally a month and a half, and they just came to us randomly last week saying the house is done, and they gave us a week to close. So 2 things: get an attorney and make sure you're staying in contact with your builder.
And can we, like when you were dealing with, you had several loans going with Pulte, and you were like friends with the girl.
We're good. I haven't had trouble with Pulte because I've had a couple other deals too.
Yeah, they must know of us now. And but again, this builder, I'm going to, once we close on this, I'm going to reach out to everybody on the YouTube channel and see if you guys ever heard of them or what we can do. Once you hear the people's story, you're going to feel for them. I guarantee you.
It's awesome.
Okay.
All right, cool. Another one from Leanne. Also, we're using a real estate agent that is a family friend. Does not know what he is doing and cannot answer our questions. Are we stuck since we started a new construction contract with him?
Yeah, you know what? I don't know how much that person's going to play a role in this thing. It's a shame that there are a lot of realtors out there that don't have a clue. That's why I watch and I actually check the numbers on a lot of people before I reach out to them. Even in YouTube, I see some really good people, but I check their numbers because you have the average realtor. I think well, maybe not in the last 2 years, but the average realtor sells 3 houses a year.
Yeah. What's that? No. 90% of the real estate business is done by the 1% of realtors.
Yeah. So it's just like everything else. So you're stuck because on the contract you signed and they're getting a commission for it and all the other stuff. But that's where your lender can come involved in a lot of this too. But most of them don't want to. They're just, I'll just say it, they're lazy. It takes a lot of work on the construction loans because you have to be on top of it, because exactly what happened to us today. If we weren't diligent on this deal and we didn't get involved yesterday to really throw a hammer on this thing, it would never have closed ever. I can guarantee you that. And I'm not saying it just because it was us, but if you're building a house, you can use any lender you want. You might lose some incentives from the builder. But in most cases, those incentives get thrown out of the water anyways, because they're going to wait till the last minute. They're going to overcharge you on rate. And they're going to overcharge you on fees. And if you're a builder's lender out there and you want to call me out, please call me out. I'm good.
All right. I think this is a follower, Electrica. Jason Hartman said landlords hated leasing to mortgage companies because when they expand, they go out. But when business slows, they fire everybody and back out of the lease.
I've been in this for 33 years. I really only get rid of people that don't produce. I don't like lazy. I'll say it this way. I don't know if anybody's old enough for Animal House, but dumb, fat, and lazy or stupid or whatever isn't a way to go through life. So I'm going to quote that. But there's a lot of people in this business and the real estate business in general that make a lot of money that really don't have a clue what they're doing. And that's why I do my due diligence and I do these lives. So you question me, ask me any question you want about real estate, and I hope that I have the answer. If I don't, what I can promise you is give me 24 hours and I'll get you the answer. But laziness, that I don't want laziness. The stupid part, you can train. I don't want to have to train somebody and teach them how to do something 12 times. If you can't figure it out after 2 or 3 times, I don't want you there either. So on my side of the fence, we didn't over hire. I never do, because I've been through 2 or 3 or 4 of these cycles before. So we try our best to do what we can when there's feasting, and when there's famine, I don't have to, because I hate to say it this way, I have families in my hand that if I fire somebody, in my mind, I'm not a huge corporation. I do feel, because it's like, well, I know he or she has a spouse and 2 kids and this and that. I don't want that. I try really hard to have everybody on my team successful, and I try to, hopefully I lead by example.
Awesome. Thank you, Dan. All right. You are correct. My score changes every day because different lenders report a different time. My score dropped 65 points one day and then went up 85 points the next day.
So that's what most people don't know, and that's when I have the credit person on here from NCC. I think I'll post it tomorrow. We'll do the thumbnail tomorrow. Remind me. We'll post that out there for the event, because I already have it scheduled. I'll give you that date and time. I'm talking to Nico, so we'll post that tomorrow. The date and time. That we have. The company's called NCC. Good people over there. They're gonna basically coach us on credit.
Danny boy, you know
Yes,
who
sir.
this guy right here is? Jonathan A. This is the guy we're getting closed on the 31st in Florida.
Oh, dude, Jonathan, I'm sorry. I'm apologizing, but it's nothing we could possibly control. That's what I spent all day yesterday and today, starting at 7:30 this morning, reaching out to everybody. I had people on conference calls. I was on hold for an hour with the appraisal review company and everything. I work behind the scenes. I truly do. Nico's the handsome fella up front. I'm the smart guy in the back room. Just kidding. No, we work as a team. Everybody has their functions. Nobody is too good or better than somebody else that they can't do it. I'd be the first. I'm answering the phones. I'm copying papers. I'm making coffee. If you saw our office, it's a pretty much a hoot. But I would like to invite you on a show with us one day, so you can help teach the people, or at least give your story, and you could be 100% honest. If we drop the ball in anywhere that I don't know of, please be transparent, but I don't think that's going to be the case. So thank you for joining us. Thank you for hanging on there. And I'll be reaching out to you to get you on the show, buddy.
All right. We got another follower, Gifted Soul. They were on last week. What if the builder contract checks the box that says you will use the lender what if the builder contract checks the box that says you will use their lender? Can you still switch? In mine, the box that is checked specifically says I will find my own lender.
Oh, if you checked it, that you're going to find your own lender. But let's assume you checked it and you don't want to use their lender. I don't know the laws, and that's where Sir Ashley might have been able to help us, because he was an attorney previously. I don't know how legally they can make you or force you use a specific company, especially if it's not in your best interest. Now, you got to remember, most of the courts and the CFPB, they were created to help the consumer, not me, the lender. They don't give a crap about us. They're there to protect you, and that's what they should be doing. And that's who I'm thinking of reaching out to in Jonathan's case, because what he has gone through is complete bullshit. And I sorry about my language, but it's just nobody should have to go through that. He's within days of closing, and they're going to say, well, nah, you can't have that house, the house of your dream that you watch being built. So I apologize for being so adamant about it, but it's just wrong. It's not how I operate.
Yeah, perfect. And guys, I'm going to show this one because we're not afraid about it. Sherry's saying she sent me an email request a couple weeks, or on April 10th about building on new land. Sherry, if I did get your email, I totally apologize. Dan can consist how much emails we get. But Dan, correct me if I'm wrong. Do we have options for actual construction loans right now?
There's one, and I would honestly say don't use us. That's the one product I would honestly say. I like being an expert. I don't like to be in the jack all trades. I like to know my lane. There is a one close loan option. Ours isn't the best out there, and it's not. So I would reach out to somebody. We are going to be affiliated with a federally chartered bank as of next week. I will check their programs for the one closed loan to see if they have like an in-house program for you. But the lenders that we're set up with to do the one closed loan, I'm not comfortable with it. And I'm not comfortable. If I'm not comfortable with it, I'm sure as heck not going to put you through that process and then me possibly screw up and lose you the whole house. So I'll be completely honest. I would thank you for checking us out. Thank you for watching. Thank you for joining. But if you're looking to build, we're not the place for you. I'd love to help, but we're not there.
No, and Sherry, that doesn't mean I apologize for not getting back to you. We'll still review any loan estimates you have. If you email me right now at Nico@the-rate-update, I will call you first thing in the morning. I promise you that.
Yeah. If you guys our emails are down below, or they're usually down there, you email both of us. I mean, I email back everybody. If you check YouTube, most of the time when somebody posts, the first comment I usually comment or reply to, I can't reply to even the chains, but if you see a comment on YouTube, that is me. And if it's not me, I'll post underneath it, guys, this isn't me. I'll never ask you for money. I'll never ask you for personal information. I'm not trying to sell you cryptocurrency. I'm not trying to sell you, anything. I just post and I'll reply to your questions and post something of that. So.
Awesome. Yeah. So they're just joking around. Are you named after Nico Bellic? No, he's named after me. I'm just joking.
Never mind.
All right. I'm in the Florida Panhandle. Thank you for reviewing my loan estimate today. I filled out my application today with you guys. Looks promising so far.
Sweet. Thank you.
Awesome. What are your thoughts on interest rates over the next 10 years, Danielson?
No clue. I can't even go out. It's hard to predict, what tomorrow's going to bring. I try to go quarter to quarter. If anybody says where we're going to be in next year, my best analogy is look at a lot of the Federal Reserve comments last year about this time, saying they will not be raising interest rates. I repeat, not be raising interest rates until at least 2023 or 2024. And 8 months later, they're already jacking up rates, and they're going to probably pop them up as high as they've been in a long, long time. So I have no idea. Sorry. It would be a 100% guess.
It's hard. We can't look in our crystal balls, Another Cocoa Beach, Florida follower.
Eric, you're on here, buddy. I missed you last time when I was down there. My wife just got back. She was down there for 2 months. I watch your stuff every day. I saw the space shuttle go over there. Eric, he's a realtor down in Cocoa Beach. I'll post his stuff down below. I also reached out to him because I love his videos. He's a bald guy that goes around town, and his videos are really good. So, Eric, I'll post your information down there, and I promise you, next time I'm in town, I'll treat you to coffee. When I went down there it was probably about 8-9 months ago, and him and I met for coffee. I was planning on doing a video, and we just started talking, and he's a really interesting guy. And he has, if you're looking for anything, a house down in Cocoa Beach, I have a place down there. Melbourne's doing fantastic. I learned it from him. If you're looking in that area to buy any properties, please reach out to him, and I'll put his link in his YouTube channel and website down below. But thanks, Eric, for joining us tonight, buddy. Awesome. Every day you need to start working some, because every day I'm jealous. You're taking pictures of the beach and the boat races. You could watch the boat races from my condo deck. If I was down there, I would have invited you. But I wasn't down there. But this is my house in Chicago. So.
All right, cool. Jasmine Dan. Okay, I've heard that people are losing around closing time because other people are using cash. Why is that? Are you talking about new builds? I think I need a little bit more on that.
Yeah, the way I read it, I can read the one section. I've heard that people are losing out closing times because other people are using cash. Once you're under contract. Okay.
Yeah. You're reading that wrong. I've heard that people are losing around closing time. Other people are using cash. Why is that? What I think she's trying to refer to is people coming in last minute with cash offers over mortgage offers.
Well, and Eric, if you don't mind chiming in on here, if Jeb's here, any of you guys, any of your realtors out there, once the house goes under contract, can you legally sell it to somebody else that comes in with a better offer after that offer is accepted? If there might be contingencies. So there might be things, other than, what all the information we're getting, but I don't know, once you sign a contract that you're going to buy that house in, 30 or 45 days, I don't know how they can pull the rug on you and sell it to somebody for cash. But Eric, if you're on here, or Jeb or anybody, if you wouldn't mind posting an answer in there. But my understanding is you can't. So if you have a realtor, is it Jasmine? Oh, you know what? I do have my glasses here. James Lee or Dan, I'll say Dan. Dan, if you have a realtor, ask them. If you don't, email to me tomorrow or call in tomorrow. You can ask for me personally. That is fine, and we'll get to the bottom of it, because you shouldn't be losing a house because somebody after the fact is bumping you. So
awesome. Dan R was just kind of commenting on his previous comment. He was asking you earlier about where rates were going to be. So he's just saying, I asked because I have a 10-year lock at 3%, but can refinance at 60 days out from construction finish. You have a 3% rate lock for a 10-year arm, I'm assuming. That's great.
We Alan got an arm today, and the arm, I think it was a 7-year arm, he said was killing it.
Really?
So if you guys are interested in the 7-year arm, I'll post some of that data. I think it was in the mid 4s.
Wow.
I don't know the scenario. I'll get the scenario for you guys tomorrow on the arms, just to throw it out there. Am I a proponent? Do I push arms? Nope. But I give you the facts. Let you decide.
That's awesome. All right, Scott. Is it smart to lock in rates now at a 1% fee on a loan for 12-month lock? Will take 1 year to build the house. Scott, quick question. Is it refundable?
Yeah.
We need a little bit more information to be able to give you a great answer.
Most of the time that loan is refundable, but why it's being it's refundable. Okay. So here's what's happening. We say on our videos, we'll lock in, it's an insurance policy, and if rates plummet, we'll just move you to another lender. These are we've really never seen times like this. So do I like doing that? No, because the lender we're using, they have skin in we locked in the rate. They had incurred costs. They worked on the file. It's like you going to work every day for, a couple of days and not getting paid for it. So I don't like doing that. And also our pull-through ratios and our closing ratios, all this stuff comes into play. However, my loyalty is to you guys. So if I have to move it to another company to get you that lower rate, but in your case, we offer the same program. We could probably get you basically the same thing they have. Why I'm not pushing that right now is I wouldn't do it. I wouldn't pay it depends on what size my loan is too. If my loan amount was 5, 6, 800,000, that. But what happens is, yes, it's refundable, but if you move lenders, you lose it. So I really don't want you to have a ton of skin in the game, because I'm still saying rates are going to be stagnant. I'm seeing by the end of the year, I think we're going to be slowing down. We're going to have more houses on the market. Gas prices and everything are just going to kill the economy. So we're going to have a pullback on things. And I think what the Federal Reserve is doing, just by promoting all the stuff and all the PR they have out there in the social media and mainstream media, I think they're doing the job for the Fed by really halting things. So I'm still a proponent. I missed it, but I didn't call it, precisely, but I'm still saying inflation is going to go away, not as fast as it came, but it's going to start to dissipate fairly soon if we haven't already seen it. And a lot of numbers I'm seeing right now are showing it. It's just not being promoted in the media right now because it's not sexy.
All right. Eccentric. If I get an adjustable rate for 5 years and rates go down next year, can I refinance to a 30-year?
Yeah, you can refinance anytime. Somebody asked me, so here's how the refinances work. Once you buy a house, you can actually refinance, 48 hours later if you're looking to just refinance to a better rate. Okay. Now, if you want to pull out cash, that's a little bit different. You usually have to wait at least 6 months or so. And then you have to wait 1 whole year to use the new value. But the one thing I will tell everybody, anybody that has bought their house in the last year and a half, 2, and you didn't put down 20% and you have PMI, please call your lender tomorrow. Make that a note. Call my lender and request that they remove my PMI, or at least what process do you need to go through? Because if you look at your mortgage statement, you're probably paying $200, $300, $400, maybe not $400. You're probably paying at least a couple $100, $200 or $300 a month in PMI. And just think of it this way. In 2021, we had the average home went up 18.9%. Okay. So if you think about it, you put down 3 or 5%. Okay. But your house value then went up 20. You are now over the threshold that you can have your PMI reduced. So even though rates are up, okay, don't refinance, but call your current lender and say, hey, what do I need to do to get my PMI process reviewed? Now, that only works for conventional loans, because FHA loans have it. If your loan is, if your LTV is under 90%, your PMI is on there for 11 years. If your LTV is over 90%, your PMI is on there for as long as you have that mortgage. So if you have an FHA loan, all bets off. You can't do anything. But if you have a conventional loan, please call your lender tomorrow. They're probably going to be slow anyways, and they might be in a good mood because they have a 3-day weekend coming. They might say, yeah, sure, I'll just click a button and reduce it. So check it out. You have nothing to lose. Man, this light is shiny. My apologies.
No,
in my backyard, it's crazy. I tried to get some light.
So I think we just kind of answered this one. They're interested in a construction loan. Are there any loans that cover land, construction, architect, and permit fees, etc.?
There is. We're not the place for it, though. I'm not being arrogant. I'm not trying to be a jerk. I'm just being honest with you. I'm not the place for you. If you want to email me, I can probably get you in touch with some companies that do it. My nephew in Pittsburgh just got a loan exactly like that. He reached out to me, and I'm like, dude, really, I'm not the place for you. We are fantastic on purchases, reverses, refinances, whatever. But the construction of perm and commercial, that's a whole different dynamic.
Yeah, definitely. So Dan, this is Scott from before about the 1%.
Not refundable.
It's not refundable.
Call us tomorrow, because if we were to lock you in, it is no, there's a difference between refundable and here. What we really meant to say is what's the word I'm looking for? Do you get it back at closing?
Yeah. So I mean, if he closes with that lender, is it refundable?
Okay. So if it's not, please call us, because ours are.
Yeah.
So if we stay with that lender, let's say we lock you in at whatever, and we go a year from now, and the rates are still there, and we're not moving you or anything, yeah, it'll get right added to your ledger as money that you put into the transaction.
That's awesome. I'm gonna go to this one real quick because this is super important for me, and us, everyone. Dan, earlier you said get a lawyer. Can you elaborate?
Yeah. People are building houses. They're going in and they get, I get it. I've been there too. You go in and you find this house you really like. You've been saving forever. It's your dream house. And you're like, I really want that house. I can go in and I can pick my cabinets. I can pick everything. I can customize it to exactly what I want. And then, we lost Nico. And then what happens is you're basically willing to sign whatever you need to. All I'm asking you is have an attorney review it and at least give you their opinion. Because I have an example, and he was on here just recently. I don't know if he's still on with us, but the builder is just kind of delaying, and they were I think truly they were trying to botch this thing, because the gentleman's appraisal came in, if I recall right, like $50,000 more than he's paying. The builder knows that. So if they can do anything and not sell it to this client for the price that they have and put it back on the market and make an extra $50,000, they don't care about the person. They want the money. So get an attorney to see, do you have an out clause? Because in this particular a person's case, they're saying if we do not close on Tuesday, now this person, they signed the contract back a year ago to build this house. They watched it build during that whole process. Now the builder comes to us, they give us all the documentation we need on Tuesday, and they say, you have to close by Friday or we're not selling it to this client. We're going to pull the contract and sell it to somebody else. So I got involved. I get involved in the background, but in this case, I got involved. And I'm like, what are you talking about? So I went all the way up to the vice president. He was gracious enough to give us till Tuesday. And he said, but if you don't have it by then, it's no deal. We don't care about the client. We don't care about the person or whatever. We're just going to sell it to somebody else. And I'm like, dude, we only need maybe one day. Nope. So I still can't to this day, and I reviewed this contract about 15 times. I can't find in there the clause that says that they can actually just pull the rug on this entire thing and not grant at least a one-day extension. It's nowhere in the contract that I can find, and I read it 5 times. I think Eric Larkin popped in.
Oh, cool. Here we go.
Well, 5-year
Well,
arms.
5-year. I got you, Dan. Well,
What's the
5-year arm.
What's the question we had for Eric though? It was in regards to Eric, I got a question for you, and I'll answer your question in a second. We had a client say if they sign a contract to buy a house, and then during the process the seller gets a cash offer, can they just take the cash offer? My thought is, if there's a contingency that in the contract, it probably reads there's a contingency. If we get a cash offer, then you have to basically satisfy this by closing, on time or earlier or whatever, or we're going to accept the cash offer. That's what I'm thinking. But Eric, is there anything else there that you know of? Can they just take another offer while you're in the process of buying a house? But while you're typing in or doing whatever, Nico, what was the question again? I'm sorry.
I got you. So for Eric's question, he was like, with a 5-year arm, will a 5-year arm be making a comeback this summer with rates over 5%?
Yeah, they're already coming back. We're starting to see. So what happened over the past couple of years, the last 10 years, nobody even published ARMs. If you had an ARM rate, the rate was, on a rate sheet would be 10%. The banks didn't want them. And who would want them when fixed rates are 2.5? Man, my lighting's bad. My apologies. I'll try to go this way.
Well, yeah, for a good example, I got into the business 10 years ago. This is the first year I'm ever quoting ARMs out ever.
Yeah. So the ARM rates, they are coming back, and I publish them every day. Where I would personally possibly entertain one, if it was God dang it, I'm sorry guys. If would I go with a 5-year ARM? Me personally, no. I'd take a 7-10 if the spread was at least. Me personally, to do it, I would need a spread of at least 1 full percent. Now that's my personal preference. I don't want to take a risk for 0.5% that, is the rate, 10 years from now going to be 0.5%. But let me dive down the adjustable rate thing, because everybody keeps saying, adjustable rates, they ruin the world. They did. But they were pretty crappy adjustable rates. The adjustable rates were subprime. Basically all subprime. Teaser rates, Nina programs, and I'll explain that again in a second. And they were subprime. I think I said the subprime thing. Teaser rates, interest only, no caps. It was a mess. Nina meant no income, no assets. So basically, you didn't have to prove anything. Your credit score is good enough. You can get 100% financing on a house. So then when things go bad, you finance 100%. So things go bad in a year or 2 or 3. Okay, you paid interest only. So your balance stayed the same. House values stayed stagnant. And then everything hit. So then what happened is you start to, you can't afford the payments. So in that payment keeps accruing interest and balances and so forth. Your property value is going down. You already have no equity in it. Your loan amount's going up, and that equals disaster. Okay. The ARMs today are completely different. But even if you took an ARM, everybody's going to say, well, 10 years from now, where a rate's going to be, and I don't know. Okay. But you got to think of it. 10 years from now, your loan balance is going to be quite different than it is today. So let's say, for example, you go to that 10-year point and you can refinance. You got to remember the adjustable rate. There's caps, there's triggers, there's all kind of things. It can go up, I think, 1% every 2 years or something like that. So there's major caps involved. So it can't get truly out of hand. Some of them even recast to even make things even better. And I won't go into that because it's not an adjustable rate video, but there's a lot of complex pieces in the arms, and they're nothing like they were 10 years ago. Nothing. Those were bad loans. And I'll admit they were terrible loans.
That's it for right now, Dan.
Awesome. Guys, we're over an hour. I just want to thank you guys. It's a holiday weekend. I honestly, Nico, I didn't think we'd have anybody on here.
Me neither.
Everybody's taking probably tomorrow off and everything else. So, guys, I want to truly say, here's my tagline. Our goal here is to educate and inform you guys everything real estate, especially the financing piece. I want to say thank you. I truly want to say thank you. I'll reschedule Sir Ashley because I'd really like to get his input on here. We had multiple realtors on here. Eric Larkin, he's down in Orlando, or I'm sorry, down in Cocoa Beach. Jeb Smith, he's out in California. We got Sir Ashley, he's in the Carolinas. We're looking for more and more YouTubers.
Maybe we get a round robin table of the master agents, man.
Yep, that's what I want to do. So I'm looking for maybe 2 more really good agents that are YouTubers. And I got who's the young lady we just got set up, and I'm going to set up with her in June. She has a good channel.
How are you going to put me on the spot like that?
She's in Utah, right?
Yes, somewhere. No, Boise,
Idaho. So we have a young lady going to join us in a couple weeks. She's a big YouTuber realtor out in Boise, Idaho. I came across her channel not too long ago. She's doing a fantastic job. So I reached out to her. I'll be damned, within 24 hours, she emailed me back. So that's how I correspond with people. So if you like me, don't like me, whatever. But at least I hope I tell the truth. I hope I fill you guys with value. That's the whole goal of the channel, is to build the credibility for us. So you're not just saying, hey, I want them because the rate. Please use us for all this. Okay. So that's all I got to say. So it's going to be a long weekend. We will be in tomorrow most of the day. If you need anything, call us, email us. I promise you we'll get back with you. If you ever email me or Nico and we don't get back, call in, ask for us. We're there. Okay. We'd love to help you. So other than that, God bless. Thank you so much for joining us tonight. And we look forward to doing this more often. So take care. Have safe. Have a great holiday.